Okay, I'm now going to do a quick summary of each of the currencies in relation to gold and silver. Obviously, I won't cover everything, but I'll cover a few. Obviously, a few of the main Western, a few of the more not spoken about ones, a couple of the currencies that are having financial issues in the markets. But let's start straight off with obviously the US dollar. That's obviously the fundamental backbone to the currencies, and all of these are as of the close Friday night. The main point of showing all these displays is to try and indicate to you guys and to the people that don't believe metals have this fantastic potential uptrend, that if you digest what it is that I will be showing you, hopefully you can come to your own conclusions why it is such a great investment. Now, with the main market controls put in place from the COMEX and the constant manipulation and suppression in price, the US dollar is the one currency that is the hardest for precious metals to break out of. But saying that, they're currently in a bull market, and it has now been confirmed that it is a technical bull market. Now, I'm only going to be covering the 5-year spans simply because there's such a volume of currencies to work through, but you can view things from the 10-year, 15-year and actually get a much better understanding. But just to roughly outline it for you, if you go back to 2011, that was the all-time highs for every currency in metals. And I'm just trying to show you the reflective consolidation of where we are now and where we'll go to in a return to all-time highs and beyond, because that's the key point I'm trying to get across in this video, that all-time highs of previous times aren't really reflective of today's markets, because the extra complication in today's markets, as opposed to the crisis of 2008, which didn't obviously transpire into metals until about 2010 and 2011 when they hit their peaks, because there's a delay between the market issues and the metals peaks. And the difference in this 5-year consolidation period in the downward trend of manipulated prices is the opposite in terms of increased debt and derivatives. So the extreme potential for this to catapult the other way when those markets start to explode, so does the price realization into the metals catapult to the extreme. And when that happens in the next 1 to 5 years' time, I don't even think people can predict the sorts of levels that these metals are going to be worth in those years ahead. However, they will be significantly higher than previous all-time highs, and we'll go on to explain why shortly. But if we can understand the all-time high and where we are currently, and with the constant devaluation of every currency, you should pick up that when you invest into sound money and a real tangible asset, and don't hold your currencies inside of the banking system, not only will you maintain your purchasing power, you should also profit significantly to the upturn when these markets self-correct. So with all that said, if we just look at these numbers on this right-hand side and bear in mind throughout this entire decade, manipulation has taken place. There's been periods in time where there's been corrections in the markets where the banking cartels and the powers that be have slightly lost grip and prices have reverted and increased, but then they have suddenly and swiftly been shunted back down out of the limelight and destroyed. That is not going to be the case this time around, simply because of the bell curve increase in debt and derivatives. So keep this all in mind as we continue. Silver via US dollar terms has crossed the $20 mark and has maintained it for the week, ending Friday the 9th of July 2016, and gold has been strong at 1365. Now in US dollar terms, it's almost back to its 2-year high and 3-year high, so imminently we should expect it to start breaking back up to the 1400 mark. Now the interesting thing to note at the moment is how silver is now starting to accelerate in its value and ratio compared to gold. Now we know silver obviously lags behind gold's rally, but the thing with silver is it always has higher highs and lower lows during bull and bear markets. And when it starts to accelerate, it will outpace the acceleration of gold. Now from the lowest point around the beginning of 2016, gold and silver ratios were in the region of pushing to 80 to 1, and now the ratios are approaching 66 to 1. And this is detailed through the percentage growth in the previous few months. Now, gold in US dollar terms over the last 6 months from its low is up 23.9%, and silver is up 42.35%. So it's getting on for a double acceleration over gold in US dollar terms. Markets are expected to be extremely turbulent, so I wouldn't expect too much consolidation. I would expect continue rallying, which is great news for all of us. Now I'm going to move on to the euro, and it is a similar story. We are into the 2-year highs, and the percentage growth again is similar to the US dollar because the two currencies are fairly controlled and pegged between each other, as Brussels is mainly lobbied by Washington anyway. Whatever Washington want to happen in the Eurozone will happen. With the whole Brexit situation, there's extreme turbulent markets in Europe, and there's a huge likelihood that many other of the countries are going to start removing themselves from the European Union. And that is going to have drastic effects on the value of gold via the euro. So I would expect the gold value and the silver value again to rally over the coming months to at least all-time highs and beyond. Now I'm going to do a double take on this one simply because this is the Canadian dollar and the Australian dollar. Now after viewing both of these currencies and how they relate to gold and silver, to me, they are looking almost identical in chart profiles and, funny enough, in their respective currency valuations. For example, if we look here, we can see the Canadian gold value is very close to its all-time high. It's currently at 1780, and the all-time high is looking at about 1830, something like that. So it's about 50 Canadian dollars off of its all-time high. Now, with the Australian dollar, it has actually surpassed its all-time high and now is 1,805 Australian dollars. As I was saying, with the formation of this chart, you can see it's nigh on identical to the Canadian. And the same thing is said about the silver chart. The silver chart, again in dollars, in Australia is 26.73, and in Canada is 26.36. So there's like a few cents between it. Again, very, very close percentage gains. 0.48 up in Canadian, 0.51 in Australian. So I'm classing these two currencies as mirroring each other. You could roughly say what happens to one will happen to the other on a historical trend line. So we can check the growth formats over the last 16 years for both of these metals in both countries. And both are within a few percent of each other. Again, silver is the one that is now starting to accelerate and outperform gold, with a doubling on the ratio growth. 14.25, 32, so that's a doubling. 14.16 to 32, so that's a doubling. So all the talk of people saying invest in silver because it's got the highest upturn, this is why. Now moving on to something which is a bit more volatile, which is the Japanese yen. And I decided to put it into a 10-year span to show you a bit more detail, because on the 5-year span it is such a volatile currency, but it is controlled again by the US dollar, and Washington has a huge impact on what goes on in Japan. Now, taking apart this huge volatility in this consolidation period, if you look at the bigger picture, which is the 10-year span, you can just see that that's exactly what it is. It's a consolidation. It's a consolidation of both silver and gold. Now, what I will go on to show you guys is a great piece of information that I've found on another channel, and I'll show you a 3-minute clip describing exactly what this is called in technical analysis terms. We'll get onto that shortly. So, same story with gold and silver. Silver is starting to double, and in Japanese terms, actually quadruple the growth of gold. So in Japanese yen, the gold price is being seriously depressed. And that is why you're hearing stories of the Japanese people going out and buying huge quantities of any gold that they can get, because they know what's happening to their currencies, and they know that the value of gold is being undermined by the governments. The Russian ruble. Now, the Russian ruble is an interesting one, because in 2011, the gold hit its peak, but it didn't hit its peak in the Western world. Whereas its peak then came in 2015, when I'm guessing all the sanctions and things like that were put upon Russia and caused extreme stress on their economy. And that caused a huge spike in the price of gold, almost doubling from the time of 2011 to 2015. In a 4-year period, it doubled. Now it's still on an increase, but it has dropped down from its all-time high and is now on its retracement, along with the Western valuation. But what is more interesting is that silver is now at its all-time highs, whereas in other currencies in the West and in the rest of the world, silver hasn't even caught up to the higher appreciation gold is going through at the moment. So for me, that's quite an interesting bit of information. This is telling you that this is how silver accelerates against the retracement of gold, and it does overtake. And again, we can see that in the 6-month growth pattern. We can see that in the 1-year growth pattern from 2015 to 2015 to today. It's a 30% gain and a 45% gain, respectively. But in ruble terms, the ruble has been heavily hit by political implications. So now both of these metals are relatively at all-time highs. This trend is just going to continue when the West starts to officially collapse. Moving on, Chinese yuan. Again, a very similar layout and very similar to the Western currencies and very similar growth patterns to the Western currencies. Now just keep this in mind, this format of this line that you're seeing here. Now I'll show you via UK pound what I'm talking about in a 10-year stretch period. Now I'll move on because that's fairly similar to the other topics. Now we've got three very interesting ones, and this is the Brazilian real, and similar to Russia because they're having extreme political and austerity measures starting to take place. They're on the border of Venezuela, and the political machine of Washington is at the moment making their way through these third world nations, stripping them of all their asset worths like mines, diamond mines, gold mines, silver mines. They're trying to capture and conquer all the materials and assets they can before this obviously goes down. Again, gold is past its all-time high. Just a small retracement that has taken place in the last few months is outperforming the 2011 period. Silver, on the other hand, slightly less, but a far more substantial growth in comparison to Western valuations. It's in its all-time high period, and this will be expected to obviously explode along with the Western explosion in precious metals. We have here the Egyptian pound, which again is past its all-time high, and silver is still only halfway from its all-time highs, so this is expecting to rally significantly in the next coming months as it lags behind gold. Now also keep this in mind for the video that I'll be playing shortly, is this uptrend followed by a consolidation followed by this uptrend. Similar, identical here. This uptrend, consolidation, and the beginning of the uptrend. Bear that in mind. Now this is the most interesting one that I stumbled across. This is the Pakistani ruble. Now for those of you who don't know where Pakistan is, just take a quick check on the Google map. And I thought this must have been a technical error on the data, but I'm pretty sure it's not. Now, I just wanted to highlight that I actually found two reports like this. I won't go into the other one because this one's more of the extreme report. But I think this goes to show that how local governments and metal exchanges can manipulate the markets in their own currencies for obviously what I would call illegal gains. This is June 2016. In the middle of June 2016, I believe it was around the 17th, 18th mark, the value of gold and silver via their exchange markets dropped 50% overnight, and then had a retracement right back to its existing level. Now, a lot of people will be looking at this going, that's insane. And it is insane, that level of drop. But all that's telling me is somebody bought a huge amount of gold and quite likely silver in a very short window of time and effectively doubled what they bought overnight. And if you were lucky enough to buy at this period here, congratulations. So it might be something just to bear in mind, guys, that governments and officials in some countries do things like this. So it might be worth just keeping a bit of cash on reserve should this event happen where you are. And you can obviously capitalize on that manipulation. Now, moving on to the UK pound. This has more of an extreme trend. Now, the UK pound has obviously they've normally been very uniformed in their move the past few years. However, with the Brexit situation and the devaluation in the UK pound, the revaluation in the precious metals is equally as significant. And I'm going to lead on to the video straight after this and just look at this move that we're seeing in gold. And that is the same move that we're going to imminently see in silver. Now, the gains in gold for the last 6 months, gold has seen an increase of 38.6%, mainly due to this Brexit situation and devaluation in the pound. And silver is now up 61% since the start of the year, which are, in my opinion, respectable gains, while most of the other commodity markets, stock markets, are tanking and are on minus numbers. But bear in mind that here we are at the all-time highs of getting on for 1200 up there and £28 down here. We're still only floating at the 1560. So I'd expect these to easily double in a very short period of time. And obviously silver hasn't quite caught up, so silver is definitely the one to look out for. The 10-year cycle showing the UK silver and gold valuations. And this is what I'll show you here. We're almost at the all-time high. Whereas with silver, we're not even close yet. There's still a long way to move there. But bear in mind, these all-time highs came when there was huge amounts of turmoil in the market. Right now, the people are still running around in a panic. The government's falling apart. You know, there's hardly any government members left in Westminster. The dust hasn't even settled from the Brexit vote. And here we are. We're already at nigh on all-time highs for the gold. So subject to what happens in the coming weeks, I can see that this is only going to go one way, and that one way is going to be going massively past this all-time high. And silver always follows the move of gold. Now this last screenshot I'm going to show you gives you a quick basket view of 9 of the currencies in both gold and silver performance in the past 15 years. Now it's showing you an average growth pattern along the bottom, and then it's showing you a total return should you have bought it back in 2001 to what it will be worth in today's currency. And you can see the total return that if you just hold precious metals as opposed to currencies, your growth is going to be significantly better than just holding cash, worthless fiat, which holds no real value because of the constant quantitative easing and money creation that goes on in our artificial societies. But bear in mind, during this period, although these growths are respectable, keep in mind that an awful lot of manipulation also took place to prevent these figures from outbreaking further. So if you're thinking these figures are respectable, these are still manipulated prices that are not the true value of what we should expect to see in the coming years and decade. So I'm going to go straight on to showing you a couple of clips. And this is from the iGold YouTube channel explaining exactly what a bull flag is and why you will see that we are in one currently in almost every currency in relation to gold and silver today.
What is a bull flag? Here is the pattern from a textbook on technical analysis. A bull flag is where you have a strong move over a period of several months or several years. You then have a flag-shaped correction that moves against the primary trend, followed by a subsequent advance roughly equivalent to the initial advance. So we can see that setting up here in the gold market, the advance from 2001 to 2011, 10 years, forming the flagpole, a 5-year correction forming the flag, and when this upper blue line here breaks, which currently comes in the upper 1300s, we will be looking at the beginning of a move that should equal this first move. Now, there are two ways to measure the potential target for this. The charts show what is happening with the fundamentals in an unemotional language of ups and downs and repeating patterns throughout nature. What would the target be when we break this upper part of the flag somewhere right below $1,400? The dollar target would be 2,700. If we are measuring and we're saying the move from 250 up to 1,900 gives us an amplitude of roughly 1,650. Add that on to the 1050 low, that gives us a target of roughly $2,700. There is another way to measure this target. No one has the ultimate 100% crystal ball. Different books, different forms of analysis will measure this in different ways. We can also measure this as a percentage move. A percentage from the 250 low to the high at 1900 was roughly a 7-fold move, roughly 600%. If we measure a 7-fold move from 1050, gives us a target of somewhere in the vicinity of $8,000 an ounce. Now, of course, this would not happen overnight, and we are just seeing the beginning hints that this market is thinking about setting up for a move like this. We would expect the amount of time to be roughly equivalent to this, a 10-year move setting up when this downtrend is broken. It's not there yet. There could be a retracement. Let's keep the big picture in mind if there is any retracement.
I'm now going to give you my WebBot 5-month brief update, which is just a quick paragraph or two from all of the WebBot reports that I have referring to gold, silver, and Bitcoin, just to give us a quick refresher on what has been said in previous reports and how it bears in relation to today, followed by an update clip from Clif on the 8th of July of how he sees the markets occurring over the next 16-day period. So as I said, I'll start with a couple of paragraphs from the January 2016 WebBot report. Now, there will be various links to Bitcoin as well, because via Clif's WebBot, it actually holds quite a temporal marker indicator for events that should occur. So without further ado, I'll get straight into it. January 2016. The Bitcoin associated sets are showing that a temporal marker of a Bitcoin to US dollar value of between $640 and $650 to the Bitcoin sometime just prior to the paper debt markets going into spasms and seizures and trading chaos. During the time before the Bitcoin temporal marker development, moving into the mid-600s, the data sets are showing that silver to gold ratio is changing, as well as the rate of price increase will also be changing. These sets are showing that an unequal amount of bidding for silver will be supporting the price, as many hands are described as reaching out for any physical silver that they can get delivered. Unfortunately, I don't have the February WebBot, so I'm going to have to go straight into the April 2016. Much of the gold supporting sets are going to the idea of dollar degraduation being a major propulsion for the dollar price of gold. These sets are clearly showing that new all-time highs are coming for gold, and further that silver will get there first. The media and public are showing as catching gold and silver fever. These sets contain data for crashing housing markets as well as deflationary debt destruction, and other sets in the same vein going to the idea that once support from Fed dies, so do all the debt asset bubbles. May 2016. The new datasets are virtually screaming that gold and silver and Bitcoin will, over the next 10 years, be reaching towards prices that are being described as many tens of times our current prices. As this situation develops, the whole of the planet and human technology will undergo a total transformation. These sets for the huge increase in paper currency, gold and silver, price of gold and silver, are part of the sets for silver too precious to use industrially, which is being forecast as a result of the monetization of silver. June 2016. The datasets within the markets entity are growing at very fast rates for gold smuggling and silver, bars and coins, smuggling, in which the data is suggesting that authorities all across the planet are going to be setting up, staging criminal smuggler busts just in an effort to create media that will be an attempt to instill fear in the general classes of citizens. And I've made a note here of perhaps they will be trying to instill fear on people that are purchasing and storing it either at their homes or offices, and trying to portray that it is not a safe asset to hold because of the risk of theft. So that will be an interesting one to watch out for when that starts coming on the news. But it may just be, armoured trucks being held up at gunpoint and ambushed at various places. And from memory, there was something hijacked, which I will have a quick search and see if I can pull that up for you. But there's definitely some gold stolen to the value of a few million. Carrying on with the June 2016, other sets related to smuggling are forecasting that depression among governments will lead likely over 2017 to stealing, then leasing gold-bearing lands to foreign mining interests. These sets have clear indicators that things do not end well. Now, I know obviously the Chinese are seriously into mining, so with the amount of debt that the Chinese have acquired from various nations, there could be some sort of deal worked out where the sovereign nations sell gold land or gold bearing land in exchange for writing off the debt, and then obviously at some point these situations turn bad, and you can imagine the scenarios that would arise there. Moving on to the most recent one, July 2016. Bitcoin prices will be well over $1,000 and that the transit through to over $2,000 will be remarkably brief. The tone of the Bitcoin sets have now firmly shifted from those of silver over to those of gold. Also note that this is occurring while many of those attributes within the silver subsets are also changing rapidly. Within the silver subsets, there are many new aspect attribute sets going to the idea that silver will be viewed by the population globally as a precaution against calamity. This new status is indicated to rise from Chinese television and the Chinese central authorities advertising to their own people. There are many new sets showing that a push to own silver will be main theme of the campaign, as the idea of silver as daily money will be reintroduced by the Chinese central authorities. And I'm now going to play a short 5-minute video that Clif released on his YouTube channel under the name Clif High, giving us a further insight to his views and opinions through his webbot. So I'll play that now for you.
Video here is to talk about the silver and the gold and Bitcoin and do a quick update on that relative to what's going on. I think we are indeed in our 16-day period of time that's going to cause all kinds of economic and social and political changes. I think it started now. In terms of the economics, though, the data was sort of clear that it would start on the 12th and continue for 16 days. The way that we get or the manner that Bitcoin behaves in those 16 days is really interesting. According to the data sets, we break through 688. So I suspect that that'll occur this weekend. It climbs. It's described as climbing through 688. And from that point on, it puts 688 behind it, and it heads on upward. And we get a corresponding move in silver. And over the course of the 16 days, it really does look like silver doubles. That silver goes to 38. We got a lot of words for doubling and that kind of thing. Those have shown up for some period of time. And then recently, we'd gotten an association between Bitcoin at 1,000 US dollars and silver at that time being at 38. And that appears to be before the end of the 16 days here. So I suspect it'll be before the 28th of July. Bitcoin's going to be kind of interesting in that regard because it'll go over 1,000 and then it will drop back down and bounce around the 888 mark for a while.
The Chinese numerology 888 has a different meaning. Triple fortune, a strengthening of the meaning of the digit 8. For this reason, numbers contained in the digit sequence 888 are considered particularly lucky and may command a premium because of it. So I'm sure many will like to buy, even if prices are most likely in yuan. The US dollar conversion and price per Bitcoin is a number of fortune and wealth.
It appears as though that actually does start on the 12th. That was my supposition all along. I had pegged it, though, to the Bitcoin halving that starts that occurs on the 10th. But the key thing to take away is that during the time that Bitcoin is bouncing around in the 800s, silver will not retreat substantially. The data shows that silver goes from 38 and it just sort of goes through 38 and keeps on going. So it looks like we're reaching for new all-time highs. I do not know when those would occur. It might well be near the end of the year that we get those. But it does show that we go through the $38 mark when Bitcoin has gone through 1,000. Now, I expect over the weekend that we'll see another devaluation of the yuan. And then I also suspect that Bitcoin will continue to rise and that there's going to be a lot of pressure on the silver shorts as soon as we open up on Monday, but it won't be anything like what we're going to see on Tuesday morning, simply because the data had associated Tuesday, it had associated 688, it's on Bitcoin going through there, it associated the rise on silver into its doubling phase, and by the way, gold doubles over winter the way silver doubles over summer. Monday will be pretty nasty. A lot of the people will be anxious over the weekend, and then they'll going into Monday morning sweating it out, and then the stuff that's going to happen late on Monday afternoon will cause them to really be anxious when the markets open up on Tuesday morning, and then we'll see how we proceed thereafter. It's going to be really interesting these next 16 days I think from Tuesday on, next Tuesday from the 12th, so 12th through the 28th.
And that's it, guys. Thanks a lot for watching, and please do comment, please do like, and I look forward to seeing you on the next video.